Energy International founder and president, Sara Vakhshouri, joins us now. Sara, great to have you. Yes, both sides do know what needs to be done to resolve this crisis and this standoff, but it's very unlikely at this point that we'll get a political, resolving of the standoff.
Well, it's too soon still to come to a conclusion because obviously these are the few months. We are entering into a few weeks since the coronavirus outbreak became a global issue and pretty much a global lockdown. The impact on the demand is just being observed and change into a much huger than was expected impact. On the supply side also, the Saudi strategy of market share and increasing its production to maximum level and reducing prices have also on the other side impacted the prices. So we could still expect at some point that if all the producers, not only the OPEC in Russia, the other ones also agree to come up with somehow cutting back their production, there might be some consensus or some agreement in the market.
Sara, in the meantime, we saw Saudi Arabia boosting their production by 12 million barrels a day, the most ever, and they've also talked about expanding exports in May. I'm curious about the export side though, because is there even demand? How would they be able to expand exports in this current macroeconomic situation?
This is a very good question because even though there are doubts about, the market is still waiting to see if Saudi is really going to produce at 12 million barrels per day, because they haven't so far produced 12 million barrels per day of only crude oil. But on the export side, they can expand their export more than previous capacity, both from their inventories. And also what they have done is that they started to utilize their Al-Fatihli gas plant in Jubail, which is part of Saudi's master gas plant, processing non-associated gas of two separate fields, the onshore field of Hasba and the onshore field of Khorasani and offshore field of Hasba. This is giving additional gas to Saudi domestic power generation, and on the other side frees up some of the oil and liquid that was used for domestic power generation, and Saudi can allocate that for export. So on the export side, Saudi can increase in this month and the coming month, it can increase its export capacity, but then all of that is going to have impact on the prices. And besides for budget deficit, there's another major issue for Saudi Arabia, and that's the IPO. Saudi Aramco IPO, where it has already lost value, and the Saudi Aramco's value has slipped about 20% so far.
Exactly. So walk me through, how long do Saudi Aramco shareholders put up with this?
The 6 months, the golden 6 months coming up in June, actually. So especially the individual Saudis that have purchased these shares have been encouraged to lock their shares and don't sell that before 6 months. So obviously the people on the ground in Saudi Arabia, they might be worried for the value of their shares. And by June, and which this 6 months deadline is coming up, if the values start dropping, then we might see the Saudis starting to selling off these shares, which is going to have a greater downward impact on the value of the Aramco shares and IPO. The other major issue that I want to mention is that currently we are seeing that all the onshore storages and inventories are filling up, as well as the tanker rates, both for transportation and floating storages, are really increasing significantly. So before even a political consensus, all of the infrastructure, the facilities, the storages might fill up, and there might not be enough capacity to store all this additional oil. And that might push the prices even to negative. And as what we saw, in U.S. we had the Wyoming asphalt sour, which is dense oil, which is used mostly for producing paving bitumen, have already gone to negative prices. So even while the market is so worried about the political consensus among the OPEC and non-OPEC producers, we might have seen all the storages to fill up, and there's no more place for additional production. So that also could have impact on the production.
I'm wondering if the increase in output is, if you would call it, a war on U.S. shale. How does U.S. shale respond? How long do they have to survive at a 20 handle on WTI?
Well, I don't like the word, the concept of war. What I would like to call it is a struggle for survival, because at the time when the at the time that we have a significant demand shock because of the coronavirus outbreak, that most of the world is on lockdown. We have major airlines like Emirates or European airlines that they have suspended most of their flights. 60% of global demand is in the transportation sector, and when the coronavirus was just a China issue, most of the institutions downward or brought their demand estimates down about 1 million barrels per day. But what we saw in March was we had about 10.5 million barrels of demand gone from the market, and there are expectations that this is going to go to about 18 million or above 19 million barrels of oil demand cut off from the market in April. So at this time that all the producers are losers and they're struggling to survive, obviously we cannot expect countries like Saudi Arabia or Russia or other OPEC producers to cut back their production to allow shale production to grow. This is something that has happened since 2017. The OPEC and Russia has cut back their production, and these have somehow subsidized the shale growth or allowed the prices to be in a level that shale production was growing. But at this point, it's really a struggle for survival. So I really don't like to call it a war, but it's a situation that everybody wants to survive. And as a consequence of this survival strategy that has been taken by OPEC and Russia, obviously we're going to see a significant negative and downward pressure on U.S. shale producer and production, which is high again. There are expectations that by end of 2020 or early 2021, we might have as much as 2 million barrels per day of U.S. oil production cut.
SVB Energy International founder and president Sara Vakhshouri, thank you for joining us.